Good morning. Good morning. I'm Debbie Bianucci with BAI, and I'm very pleased to have the opportunity to introduce a panel of CEOs from the FinTech 100 group, excuse me, that will have a dialogue today about some important issues in financial services and in particular in technology. I don't have to tell you how many important decisions you are facing as you're trying to navigate these times and as you're trying to set strategy for your organization. And our hope with this session, while it will cover a wide range of topics, that you'll get some interesting insights from people who really are in the middle of driving innovation in technology in our industry. We've been doing this now for several years, and we're so pleased again to have Penny Crosman back, who is the editor-in-chief of Bank Technology News. And Penny will moderate this session and lead us through some really interesting conversations. So I'll turn it over to Penny.
Thank you, Debbie. Very gracious introduction. Can you hear me? Yeah, okay. Thank you all for coming. We have a great panel today. We have Raj Shivdasani at Harlan Financial Solutions on your far right. We have Brad Smith at Intuit. And we have Gary Cawthorn at Wausau Financial Services, Wausau Financial Systems. So our topic today is new challenges and opportunities for retail banks and where technology can help. My first question is, we're seeing a lot of new competition out there. On Monday, we saw Walmart and American Express come out with this new sort of quasi-prepaid debit card that has a lot of interesting possibilities. It's accepted at every American Express terminal. You can load cash onto it at any Walmart store, at an ATM. You can have your paycheck deposited into it. There's a there's a mobile remote deposit capture app that people can use to get checks into it. Last week we saw Amazon get into the lending business for their merchants. That was our most emailed story for the week. We're seeing competitors like Move and Bank and Simple move forward with their sort of, again, kind of quasi prepaid checking whatnot accounts. And you know, all of these competitors are offering what they call frictionless banking. They're offering a new approach. So they say, with different pricing, with different kinds of customization for customers, and they feel they're offering, you know, an alternative that retail consumers really want. Do retail banks need to step it up, and what are some of the things that they need to do, and the technologies that'll help them do it? I don't know who wants to start.
I don't know if you can. There we go. I do believe that there's a lot of disintermediation going on. And I think we're seeing it in payments, and we're seeing it in lending. And I think over the next 3 to 5 years, I think it's going to settle into where I think financial institutions, and I'm talking about depository institutions, you're going to end up with classes. You're going to end up with I think you're going to end up on one side with what I call the universal bank: consumer, commercial, mortgage, investments, insurance, international trade, wholesale banking, and the like, right? Treasuries. On the other side, you're going to end up with the community FI that's going to be very specialized, niche-oriented. And then you're going to have the non-banks and the neobanks, some of those you just mentioned, and they will disintermediate. And I think the biggest challenge over the next 3 to 5 years in terms of retaining customer, growing wallet share is not so much products and services, because they're there, right? Prepaid cards and all of that. It's about how banks, and credit unions for that matter, participate in this new ecosystem in terms of their customers and the movement of money. And I think that's going to be huge. So I think maintaining parity in terms of prepaid cards, which is the essence of what's going on with American Express and Walmart, is important. But I also think that the customers they're going after is this 40 million unbanked, underbanked population. And the particular focus you've got to have is the 30 million that are underbanked. They're doing some banking with you today. And it's important for you to go back to your basics of enhancing wallet share. And why are you being disintermediated with that individual perhaps on prepaid cards or on lending for that matter? So I think it's a wake-up call for the depository institutions to step up knowing your customer and knowing how to enhance wallet share. And it's not so much about products and services, but it's in the way you deliver it and you enable convenience and accessibility.
Brad, any
Yeah,
thoughts?
I couldn't agree more with Raj. And it's not just the banking industry, it's technology and it's anyone who's serving consumers or small businesses, period. And we're in the midst of this huge shift to digital. And on the competitive side, we call it speedboats and battleships. The competitors that I don't see coming out of a dorm room in Stanford, those are the ones that are reinventing our business models around us, whether it's the banking industry or it's payments or it's any of the things that Raj mentioned. And then there's battleships, and these are companies that already have large ecosystems and assets that are getting together and forming a whole new way of distribution or a whole new way of creating a value prop. And I think the one that's going to win, or the ones that are going to win, are the ones that understand what's most important to the consumer and small business. And this is a world that we're in now where they want deep personalization. No one today has the same MP3 player. We all download the music we want. We choose what apps go on our tablets and phones. We have a highly customized product experience, and that's what consumers and small businesses want. The second thing we've now realized is the mobile experience is one. I don't know if anyone in the audience has children or grandchildren under the age of 6, but have you ever watched a child walk up to the TV screen and swipe the glass to change the channel? That is the way people expect to interact now with their products and services. And so you have to be able to embrace those things and figure out what is core, what is fundamental that you do that no one else can compete with, but embrace personalization, insights, and the mobile experience, and you have a better chance than many of competing and winning in that environment.
I guess just a comment on the unbanked. Raj mentioned 40 million in the unbanked category, and I think some banks believe that the unbanked is almost a community effort rather than a fee opportunity. And I would suggest that there is a large fee opportunity, especially with prepaid cards, in the unbanked space. There are already businesses making lots of money off the unbanked, and the ability to shift that ecosystem into the banking world with prepaid cards is really what Walmart's trying to do here in Amazon as well. So don't think that there is not money to be made out of that market segment.
Is that all the unbanked want? Is prepaid cards? That's all anybody talks about is prepaid cards. Are there any other products that really ought to be out? That maybe some want regular checking accounts with lower fees or something of that nature.
Well, essentially, I mean, if you look at what Green Dot's done, right? They own a bank. They start with prepaid cards, right? You load up, you take your direct deposits, load up the prepaid card, but now they're allowing you to move excess funds into what I call a virtual savings account that's tied to that same prepaid card number.
Yeah.
So they're enabling savings, and if you look at the underbanked, these could be students too, and all they basically need is an ability to deposit their cash or the checks and have access to those funds. And that's what prepaid does. It's known funds, good funds that get moved to the point of purchase, point of sale, whatever. And then the other is if there's any excess funds, it moves into a savings account. And that's all they want. It's very simple banking. Some of them aren't even ready for credit yet. But the key is to harness those relationships. And I think there's a large underbanked population within the banks. They could have a savings account, but they don't have a checking account. They don't have a debit. They don't have a credit. So I think there's a huge opportunity for banks to fundamentally focus on the fundamentals of knowing your customer and enhancing wallet share, and then capturing them young. You got to capture them young because they will grow, and it's a function of growing assets over time with you.
Well, yeah.
No, go ahead.
Well, Brad, that ties in with what you were saying about your 6-year-old being very familiar with how to use a mobile device. What will the mobile banking app look like in 5 years? What are some of the features we don't have today that you think we will be able to add on over time?
Yeah, well, I think first, Penny, one of the things we've learned with mobile experiences in general is it needs to be completely frictionless. You're moving into an era now where consumers and small businesses don't want to have never enter data twice. They want to have never enter data at all. In fact, every field that you ask a consumer to complete on a mobile app decreases conversion by 50%. A username, 50% drop off. A password, another 50% drop off. So it is time to benefit matters. And that's the most important thing. I think the second thing you have to do is you have to reimagine that you weren't born 30 years ago or 3 decades ago. You have to imagine you were born 30 days ago. And how would you have reimagined your products and services if they were delivered in a mobile device that was gesture driven? Or you speak in the end of the phone and say, what is my banking balance? Do I have enough money to pay for these Nike tennis shoes? And you want to have that sort of interaction model. And that's the expectation of this next generation. They are a do-it-for-me model. And they are a model that actually expects to interact with devices very differently than we have had in the past. I think the secret is it's also very rich customer insight. It used to be the personal interaction, and we would try to do the Socratic method to find out what was important to you. And I can tell you, being in a business where every New Year's Eve someone makes a resolution they're going to keep their budget clean this year and quicken, or they're going to really go on a diet and go to the health club this year, and then you look at them in February and they're back to their old behaviors. This is where the mobile experience helps you, because you don't have to listen to what they say. You can observe what they're doing. You can see where they're spending. You can see what things they drop off and where they actually engage. And if you double down in those areas and remove the friction points, you have a completely different opportunity to build a relationship. And not to drone on, but here's the proof point. Today, our customers that use online banking through the banks engage with the bank an average of 10 times a month. When we rolled out the mobile banking product, the engagement went up to 19 times a month. And when we introduced the tablet form of online banking, it went up to over 30 times a month. And what we can tell you is engagement drives profitability. They're 52% more profitable for the bank than the ones that are actually offline and not doing any sort of online banking. So this is a huge opportunity, but it changes the way you interact with your customer.
Gary, what do you see being added to mobile apps?
Yes, I mean, to build on what Brad was saying, if you look at this generation that we're talking about, the millennial generation, these are the people that were born between 1980 and today. We're talking about 80 million people. We're talking about the ability to, the current spending power is about $300 billion, and they're going to inherit from my generation $17 trillion. I think this is the target market for banks to develop the mobile apps, and it's ease of use, it's mobility. I guess if you leave the conference, remember 3 words: mobility, mobility, and mobility. And that mobility is all around ease of use. So I actually see it extending, so not the banking app actually going into other kinds of consumer capabilities where you can buy things right through your banking app. You can, from a small business perspective, you can. What does a small business doesn't have is time. So if you can create that frictionless experience for a small business, whether it's doing payments, doing payroll, managing their website, for a small business, that's a very high value, and it correlates to fee income for the banking institutions.
That makes sense. And did you have a thought on that also?
Yeah, I really think this goes to the heart of what I call multi-channel integration. I think most banks today, if you look at your online banking capabilities today, you're probably offering the fundamental things of transaction, inquiries, bill pay, money movement. But I think the time has come to empowering the customer to open accounts, fund accounts online, real time. So go beyond just transactional stuff that you've been used to doing, and then bring that to all of the devices. And then more importantly, also make sure the storefront or the branch is seamlessly aware of what's going on. There's a lot of abandonment that goes on. The more that you bring to the online channel in terms of account opening, account funding, there's more abandonment that goes on that channel. And it's important when that customer walks into the branch that transaction gets picked up where the customer left off. So straight through processing, multi-channel integration becomes real important. And there's technologies that do that today. I remember the days where we used to talk about integrated back office core systems, right? There's still banks, financial institutions that don't have 360 views of their customers, don't have 360 views of their bank. And that technology's been around for a long time. You got to get there. That's part of knowing your bank, knowing your customer, and playing to win and playing in your niche. The important thing now is while that's been happening on the back office side, the channels have been totally disintermediated. I don't know how many banks or credit unions in this crowd have a mobile provider from one place, an internet online provider a second place, a call center provider a third, a teller provider a fourth, sales and service a fifth, and it's time for those channels to get integrated, and they've all got to go real time. And I think that's part of rendering the entire experience, not just the mobility experience. It's about enhancing what I call convenience and accessibility, which is part of your fundamental value propositions. And with every channel, whether it's mobile or whether it's ATMs, the old channels still exist. So it's just another add-on, right? So mobile is not going to take away from the branch. In fact, it's going to allow you to repurpose the branch for more relationship and advice than transaction.
You bring up a good point. We're seeing a lot of interest in this area of customer analytics and analyzing the customer transactions, analyzing the customer's tweets and Facebook posts and other sources of information to really try to develop that real strong picture of what the customers like, what they want, what they might be ready for, what products they might really be ready for. And one of you, and I won't say who to protect the guilty, said that most banks today are in Excel hell. So what do you think retail banks need to do to get better at curating the right information and querying it properly and analyzing it in intelligent ways so that they can kind of emulate what you used to have, which was somebody coming into a branch that you knew they were your neighbor and you knew their family and you knew where they lived and you knew everything about them. Any of you have any thoughts on that?
Yeah, I'll start. I think, first of all, it starts with a mindset. And if you imagine the mindset being that it's the customer's data and not the bank's, it's clearly a part of your relationship. And so it's deep insight into who the customer is. And one of the things that I've learned in my years is ethnography, follow me homes. The ability to actually observe someone doing something will give you deeper insights than sitting down and doing a survey or trying to basically predict the future. And what's amazing about data now is you have the ability to watch patterns. You have the ability to observe behavior. You have the ability to see where people are engaging and where people are dropping off. And there's no deeper insight into your customer relationship than that. But then the key is, what do you do with that? And our experience has been that the ultimate end consumer in the small business wants two things from data. Everyone's talking about big data. We actually talk about big data for the little guy. But what it means to the end user is two things: better products and breakthrough benefits. On the better product side, we've now entered a generation where if it exists anywhere, don't make me key it in. If it's on my Facebook, if it's on my LinkedIn, if it's in my checking account, if it's any place else, you should have that information. It ought to be inputted in for me so I don't have to do any work. If you know my credit scores, if you know my P&L from QuickBooks, if you know what my TurboTax return said, why are you having me fill out an application for a loan? Why don't you go observe all that and give me sort of an indicator of whether I'm qualified or not? So there's breakthrough, there's big product opportunities. And then second is insights. Better insights for breakthrough benefits. How can you help me make smarter decisions? If I'm a consumer and you know what my financial situation is, can you give me an indication of whether I'm a healthier or a less healthy family compared to others? And can you help me with decisions that may help me get on the right track? If I'm a small business owner, can you let me know how my accounts receivable look or how my actual transactions look compared to others? And you can anonymize the data, but give me some sense of how I'm performing. And I think those create real differentiating opportunities for the bank. And I think it creates real breakthrough benefits for the end user. So big data is the customer's value, and what can you do to make better product experiences and give them deeper insights so that they can make more informed decisions. I feel like those are the two things that will really help all of us take the next step with this next generation of customers.
And just to play devil's advocate on that, I have
Sure.
seen some of the big banks have offered these apps where you can get a sense of what everyone else in your neighborhood is spending their money on. And I've seen people write in and say, what the heck why do I want to know that? Like, who cares? But what are some of the right things, right types of data, that anonymized data, to share with consumers, do you think?
Well, one of the things we've kind of touched on a few times, we haven't talked about explicitly, is small business. Mm-hmm. And there is this new generation of small business owners coming up that are really the personal businesses. They commingle their personal life and their professional life. They write the checks out of the same checking account, but at the end of the year they have to separate what's a business expense from a personal expense. They behave a lot like consumers, but it's a very lonely job. They have no idea. They know 1 out of 2 of them will not be in business at the end of 12 months. They're always sure it'll be the other person who will go out of business. But they don't really have the sort of advice and insights of a more fully formed small business. Mm-hmm. And so giving them the ability to know whether the decisions they're making have high risk or low risk compared to others who look like them, I actually think is really valuable. And I would continue to think about testing that. If you're putting something out the consumers are giving you negative feedback on, take the time to ask why. Find out why that particular piece didn't resonate. But I would not give up on using data to create insights, because I think we're entering an era now where that will be a key differentiator for many providers. Mm.
Yeah, I agree with Brad's comment, especially in the small business segment. Our company does an awful lot with cash management services, and typically financial services companies think this is high-end corporations. When in fact, aggregating all that payment information for a small business owner, and again, as I said before, what they don't have is time, and have straight-through processing to QuickBooks or to another accounting system. There's a very large opportunity for financial institutions to offer that aggregation of all payment information across all the different payment channels for the small business. And I think that's I don't think that banks have really exploited that segment in the past.
And how do you make it look good on a device that's 3x5, 2x5 inches?
I think you show summary data, and then if you want to drill down and say, okay, I want to see all the checks or all the payments that were made by a certain customer, you can quickly navigate to that. Again, it's about ease of use, it's about flexibility, it's about not having to put the customer's name in. It's just you navigate right through it.
Did you have a thought also on this?
Just in terms of analytics, look, folks, we've been using small data, or what we call structured data, for a long time. You use that in your marketing MCIF systems today to do better one-to-one marketing to your customers, get to know your customers better, improve wallet share, retain those customers, know the customers that you're most likely to lose, most customers you're most likely to sell the next product to. So you've used marketing analytics for a long time. I think the real play also, in addition to what the folks have said here, is lending. If you look at what's happened in this country, lending is still an art form. And the whole concept of, I think, the comment you made about Excel Hell, but think about credit risk not being integrated into your lending cycle today. And so credit risk management and having risk management systems, heavy use of analytics in terms of, especially on the commercial side, or even CRE, CNI loans. There's technology today that allows you to do better risk management in terms of who you're lending to, collateral that you're putting up, and have that baked in as part of your loan origination process. So there's structured data or analytics in play in just helping you make better loans quickly, and then also using analytics to make sure that you're keeping those loans current. You know the status of the collateral, and you know what your concentration risk is, interest rate risk is, etc. All that technology exists today. Big data is another word for, and I'll show my age here, what we used to call data warehouse and data mining. It's unstructured data, and to Brad's point, it's coming from all over the place. It's coming from blogs, it's coming from websites, it's coming from Facebooks, and it's coming from all those sources. And why can't you aggregate that and help yourself render a better experience for your customers?
Yeah, just one last piece on this. We've all lived through the technology generations where it used to be a fully integrated experience required technology being hardwired together. We're now entering a world where the cloud is both public and private, and basically what customers want is to liberate the data. No matter where the data exists, liberate the data and find a way to pull that data into your technology so it's a seamless experience from their perspective. but it does not require the hard coding that brings the technologies together. And that's an advantage for us now because technologies exist where you can have an open API, you can do the right authentication, you can pull the data in, you can validate the data, and you can create a seamless experience for customers without being completely vertically integrated or hardwired into these other technologies. It's just huge opportunity.
Now with that, and with your earlier comment about being able to pre-populate mobile apps with all the customers' information, they don't have to type anything in. That to me calls for a higher grade of security than maybe we have today. It seems like you need more than a username and password if you're going to let somebody go into Facebook and access all of their banking information, for example. How are companies like yours going to provide those extra levels of security? I actually thought RSA had an interesting announcement last week with this product that separates the customer's credentials, so you store some pieces of their credentials in one server and other pieces in another server, so that both servers would have to be hacked into simultaneously in order to actually, theoretically, that's how the product works. Are you guys going to have to offer things like that to keep this information safe?
We do it today as a provider of online banking and mobile banking, and we provide outsourced on-demand services today for core systems. We have to protect that data. So encryption is there. Our data centers are hardened. I think we're seeing more of a movement of banks and thrifts and credit unions that typically would run in-house or on-premise are moving their internet-facing applications to more to the data centers. Partly to get the benefits of a hardened data center. It's very hard for a community institution to put up a very hardened data center to keep the bad guys out. And all that technology exists today. The biggest issue with fraud today is social engineering. That's where the consumer or the user gives up their credentials. And there's nothing today that can stop that. So there's an element of education that has to go on. But in terms of encrypted data, data at rest, data in motion, how hard our data centers are, denial of service attacks, all of those things, that's what we spend money on. That's what we do as a provider. And it's table stakes for us. And it's table stakes for our financial institution customers. But social engineering is a whole different animal.
Yeah, you both nodded at that. Is there anything a bank can do to get their customers to behave a little more responsibly and use some best practices when they're doing mobile banking or even surfing the web in general, not exposing everything, all their clicks, all their browser activity?
Well, it does come down to education. And like Raj, and I'm sure like Brad, we have hardened data centers. We have all the security in place. We're actually audited by the federal regulators, just like all of you are. So we're spending a lot of money in that area, but we also spend a lot of time internally on education. And the social engineering issue is probably the biggest issue. And I think that banks need to do more of that to for their customers. There's no technology that will prevent somebody from giving away their password or a phishing scam that would come in and that looks like the bank's website, and they say, here's my password, to go ahead and reset it. It's really an education issue.
Yeah, I agree, and I think the real dilemma is, while it's social engineering and it's the end user who needs to be educated, I think we have to keep accountability and responsibility for educating them, because at the end of the day, if there's an issue, it will be our brands that will suffer because they will assume that it's something that we didn't do to help them. And so the real challenge is, how do you help people with authentication and data privacy when not creating friction in the experience? Because we just talked about, we live in a world now where we download these apps, we use them for 3 or 4 or 5 seconds. If we don't like it, we hold it long enough for it to jiggle, we hit the black X and it's gone. And so you've got to find a way to have a frictionless environment that protects the privacy and security. And it's an education process. It's innovation, finding ways to create, as you described with the earlier vendor, a way to do this in a multi-factor process that protects the end user but doesn't put a lot of friction in. And I think it's our responsibility to continue to innovate The challenge is what we have built for many years was protected behind firewalls and data centers. Now it has moved out to the palm of our hand in the form of these new computers and tablets and phones, and we have to think about a different way to keep the bad guys out and to protect the end user and that kind of experience. So it's constant innovation, it's education, and it's keeping the responsibility and saying this is our job to help that individual be protected.
So we'll probably see some more new products coming out this year with new ways of verifying authentication, and we're seeing some interesting things with thumbprints and palm prints and retina scans and biometric.
James Bond stuff.
Yeah. So we'll see what happens with all of that. You had mentioned retail banking platforms becoming more open and being able to share more information across different modules, the mobile banking, online banking, and whatnot, and across partners. And we're seeing some of that activity recently. Intuit, you've opened up your platform to partners as of yesterday. Wausau and mFoundry announced a partnership yesterday where their two products are going to work closely together. But what does it mean to be truly open? Because you always hear vendors say, oh, we've got our product is open, we'll work with anybody. Yeah, I mean, you can write an API to anything. But what do you think it really means when you say open? What is that really?
Really open. What it means is, at the end of the day, the consumer and the small business will pick the best product regardless of whether you've created an artificial barrier to not let somebody participate or not. And if you're not in that consideration set, then it's just a matter of time before you're no longer going to be a viable entity. So for us, what we've realized is two things. We're in a world now where everything's in the cloud, everything's digital. They expect it to work across multiple platforms and devices, and they expect to seamlessly integrate with every other experience they're participating in. They want this data to come from everywhere, and so the ability to have all their other efforts aggregate into an experience that you provide as a product or service is important. And I think the second piece is, and this is where there's a real mindset, we have to recognize that customers want a 360 view of their life and not just of the life they have with you. And so if you aren't able to give them a complete view of everything that they're doing in their lives and give them this aggregated picture, then you really put yourself at risk of whether you're going to be a long-term service provider for them. So I asked this question of some fellow CEOs in the Silicon Valley last Thursday. We do a CEO roundtable. And I said, when you talk about an open platform, where do you draw the line with your competition? And one of my peers said, the fact that you asked the question let me know that you don't quite get it yet. You have to be acknowledging the fact that everybody out there is a player and that you have to be willing to outperform them in your product and have it work with the rest of your products if you want to be an entity in the long term. It's maybe a bias we have, but at least it's one that the Valley believes in. And I can tell you, as we've opened up, we have learned a ton of positive experiences. And we weighed the risks more than we counted the upside, and the upside's a lot higher than we ever perceived.
And so do you provide an open toolkit? Here's our whole foundation. You can do what you want with it?
Yeah, I'll give you a quick example. We have a product called QuickBooks Online. We've had it in 5 countries up till July 19th. We decided to open it up, make it a user contribution model where end users and third-party developers could help us localize the language and localize the taxes. Everybody said, well, how will you do that? What if someone puts crummy data in? Well, we borrowed the Wikipedia model, which is we have an editor-in-chief that looks in and makes sure that the language is correct and makes sure the taxes are right. On July 19th, we rolled that out on a soft launch. We're sitting here today. We're in 152 countries, 40 languages, and 500 tax jurisdictions, and our engineers did not do any of the work. That is a model where open creates a whole new opportunity for you to accelerate progress, to get end users customizing the product in ways you could have never done on your own.
What does open mean to you, Raj?
In a traditional sense, interoperability. And again, I look at it from a financial institution perspective. Brad's touched on it from a customer perspective. Customer empowerment is huge. So you've got to be very flexible in how you offer products and services, and you've got to be able to bring up a product, think about a product in the morning and offer it in the afternoon. I mean, so, and that calls for a lot of openness and interoperability. But fundamentally, if I look at the back office of a financial institution, typically your core systems will allow you to do a certain level of integrated back office work, but then you've got to open it up to third-party applications, and they've got to work seamlessly so that you never lose that 360 view of the bank. And you've got to, no matter how many providers you have in your back office, your systems have to be open, and have to have a high degree of interconnectivity, so you're always looking at a 360 view of the bank. More importantly, the employee's got a 360 view of the customer's accounts, and more importantly, if the customer's on the online channel, has a 360 view of all the accounts either processed by the bank or brokered by the bank. And so again, to me, from a technology perspective, interoperability is big and goes hand in hand with integration. And part of getting to interoperability nirvana is having open systems, having open middleware connectors, and all of that sort of stuff. And then from a customer perspective, I agree with what Brad just said. So.
Yeah, I agree with the comments, and I do think that the day of a very large technology firm trying to dictate or to dominate standards and try and win it all, those days are gone. And we can all recall of technology players that have tried that, but in today's environment, having applications work with different applications and playing and not have a rip and replace strategy is critical.
So the two newest devices I think that retail banking is happening on are the tablet and the video kiosk, or whatever you want. Sometimes it's sort of a mirrored display wall. Do any of you have any thoughts on what will be the next features, the next applications to be loaded onto those newer devices in branches and that consumers have?
Yeah, I think the tablet is an untethered device. It's no different than the smartphone. So I think you're entering into an untethered world. And then where things would rely on the smart client or the smart device for journaling and that sort of stuff is being done in private clouds. So I think this whole area of thin client work, and that's what the tablet is. And more important, it's all in the area of mobility. So I think it's back to mobile banking. Mobile banking is not just a smartphone, it's as much the tablet. And it's not just the tablet for the customer, it's also a tablet for the employee. And I think as we go into this age of mobility, I think it's important for the banks to follow that in terms of their employees and their officers. Because relationship banking will matter still. Why can't that bank officer be a mobile officer with a tablet that goes to a place, a small business or a corporation to do banking? So I think tablets going to allow you to untether and deliver the bank, extend reach to the point of interaction with the customer. So think of tablet as nothing but an untethered device that allows you to do banking outside the bank's brick and mortar.
Go ahead, Gary.
Well, when I talked about mobility, that's what I was talking about. It wasn't just a smartphone, or it was really taking banking services out to the client, wherever the customer is. I mean, we have clients today, banking clients, that have tablets, and they're going out and opening up new accounts with them. They're doing lending applications and lending processing, and they're doing paperless treasury. So they're really, and it seems like we're discovering, or our clients are discovering, more and more applications of how they can use this untethered device and take the banking out to the client.
And Penny, just to build on both Gary and Raj's points, I have learned the hard way that most of my forecasts are wrong. And so we have adopted this model of lean startup, which is have a hypothesis, run an experiment, and see if customers do or don't like that. And what we've discovered is that most of what we've been able to do in an analog world can be done in a digital world and in a mobile world. But it has to be reimagined. I'll give you a great example. When we rolled out mobile devices, we have a product called TurboTax, which is a question and answer interview for 45 minutes to get your taxes done. We said mobile's become the new computer. How do we interact in that model? Engineers said, I don't know, but we'll go run experiments. They came back with the ability to take a picture of a W-2, have optical character recognition, read the data, pre-fill your entire tax return to be done in less than 7 minutes. And it just reimagined how taxes could be done. Of course, remote deposit capture for this audience is the same thing. So the question I've learned to ask is why not? Why not be able to do everything we do right now in this world on a tablet and then run an experiment to prove if it can be done and how it could be reimagined to be done effectively?
So let's talk about IT efficiency. As banks are trying to develop for all of these channels, they're trying to get better, they're trying to integrate these channels better. How can they keep their back office or their server rooms really efficient and low cost so that they can devote more energy to all the customer-facing technology they need to provide?
So the use of tablets is actually one example, because Now you talk about not only do I take the banking to the client, but I can have a paperless experience. And paper generates a lot of cost, and it creates a lot of inefficiency in banks. So now if I sign up a corporate treasury, for example, I only have to print what my compliance officer is telling me I have to print for regulatory requirements, and everything else. I mean, in one bank example, there was over 100 different pages of documents for corporate treasury, and it now goes down to one that has to be either electronically signed or then emailed to the client. So there's a huge amount of efficiency that can be gained by moving to this new technology.
I've been through 5 gens of banking automation technology, and if there ever was a time, it's this generation where I honestly believe that technology is ahead of demand, especially in this country. I mean, banks, credit unions, thrifts have yet to step up and really use technology that's available today as an enabler to really build the bank's brand and extend the value proposition.
For example?
For example, I mean, you've still got banks running on COBOL mainframe systems. The cost of ownership, the cost to maintain is huge. It doesn't bring the flexibilities. I mean, you've got systems that still don't render 360 views of the customer or the bank. They don't seamlessly interconnect. Parameterization doesn't exist. To change a product type, to introduce a new loan type, takes months. There are systems today, that are parameterized, configurable. You decide as the leadership of a bank to offer a particular product type this morning, you're there this afternoon with it. No limits to lending types, no limit to deposit types, no limit to owners of accounts and the number of participants you can have on a loan. All of those things have to do with modern systems, applications that have been designed with the customer in mind, and applications that have been designed with relationship banking in mind. And you have to pay attention to the technology framework running in your institutions today, because you need to step up. It's like running in an age of vinyl records when you should be downloading the music, right? And there are still institutions in this country that are running on 70s, 80s vintage technology, both from a hardware, networking, and applications perspective. And you're doing yourselves a gross injustice in the efficiency side of the house. Your cost of ownership, your efficiency mark, it's got to be very, very kludgy and clumsy. And it reflects in lending. It reflects in how you open accounts and how you do business. So I think worrying about your technology underpinnings is huge. I think bringing that together in terms of modern technology, laying down modern application framework, allows this whole level of integration, interoperability, seamless connectivity to your channels, to your customers. And I think technology is a big piece of that.
Yeah, and one of the most popular jokes in the Silicon Valley is, why was God able to create heaven and earth in 7 days and 7 nights? Because he did not have an installed base of customers and legacy technology to worry about. And the reality is, I think the mindset has to move from ownership to outcomes. There's a very prominent venture capitalist who just shared some math that said Moore's Law used to predict that technology platform shifts would occur every 6 years. Now the data suggests with mobile and all the things that are available through tablets, it's happening every 6 months. There is no way an established player can do it all themselves, to own it all themselves, and to build it all themselves. So taking advantage of all these open source, taking advantage of the assets that others are bringing to bear, working on interoperability as opposed to just deep integration, those are the things that I think will help all of us stay relevant in a world where it's moving faster than any one company can actually keep up with. And I think that's a huge opportunity for us.
Great. Well, I think our time is up. Thank you all so much for coming. I really enjoyed this conversation, and I hope you enjoy the rest of the show. Thank you all for coming.
Thank you.